Hey guys, today I'm going to be breaking down a trade I took on Euro AUD. This was not a trade that we put out a call for in the TP Mint. It's just one that Aaron and I happened to see, and Aaron and I both took the trade. So I'm going to explain to you the reasons why I took this trade. It is probably a perfect example of a reversal trade. So I'm first going to start on the daily chart for Euro AUD. According to our strategy, if the daily is above the 8 EMA and you're playing D15s, so you'd be looking for long positions, right? And you're looking for D15 longs the entire time that the daily candle is above the 8 EMA. This is D15 continuation longs. So the take profit point on a D15 continuation is a 4-hour anchor. So the 4-hour hitting plus 60, the overbought level, would be the take profit for this. The lower take profit for a D15 long is a 1-hour anchor, but that's usually at the start of the daily longing. So it's more of the reversal take profit is the TP1. TP2 is the continuation take profit. So I'm just going to go down to the 4-hour time frame and show you that now. All right, so any D15 continuation long that we might have had up here along there where I marked up previously, you can see that the take profit points would have been these 4-hour waves hitting plus 60, right? And if you go and look on TP Mint's YouTube channel, I put out a long form video recently saying, do not enter at take profit zones. So you cannot keep longing if you're at a take profit for a D15 long position. It's going to come off a little bit, right? So you can either wait for it to reset and try and catch the relong after it resets, or if you want to be risky, like I was, you can try and catch the reversal coming off of that take profit zone. So another way that I spot the D15 reversal is that I say if a 4-hour is breaking down on plus 60, it's highly probable that it's going to push the next daily candle to be a red candle. Also, and you can see it already, we had the regular bearish divergence on the 4-hour. So you've got the 4-hour breaking down on plus 60 and the reversal divergence. So from the start of the next day, 9 o'clock in the morning on Wednesday, I am looking for a D15 short potentially, and it's a reversal. So a D15 short reversal, the TP is going to be the take profit 1, and TP1 is a 1-hour hitting negative 60, the oversold level. So let's first go down to the 15-minute time frame and look at the entry. So here we are on the 15-minute time frame, and this is the step-by-step entry conditions. So that is the start of the day, and we want price to be above the daily open. Then we want the wave to hit plus 60, the overbought level on market cipher B, just up here, right? And then we want the candle body to close under the 8 EMA. Just going to zoom in so that you can see that. Candle body closing under the 8 EMA, and that was our entry. Don't know why it's shifted over. Right, that was our entry. So I'm just going to show you on the 1-hour where the take profit would have been for this. So like I said, D15, a reversal entry. You're targeting take profit 1, which is the 1-hour hitting negative 60, the oversold level. And there we are on the 1-hour. So Aaron and I actually took profit over here, which is pretty sad. So we only got a 2x, and it ended up, I think, going to like a 5. So you can see that was kind of, it was touching negative 60, so we weren't sure. And also we were going to bed, and Jerome Powell was giving his speech at 2 o'clock in the morning our time. So we just didn't want to, risk being in the trade. I suppose we could have moved our stop to break even, but you can see the proper 1-hour anchor was probably the better take profit. So that is an explanation of the trade, you guys. I'm just going to show you, like I always do, that this entry was catching the top wick on the daily candle, and that is the whole point of the strategy. We are using the overbought and oversold levels on a lower time frame to catch the wicks on the corresponding higher time frame candle. So I'll just leave that there so we know what day we're looking at. All right, I've zoomed all the way in. That's the daily candle. You're catching the top wick of that candle using the strategy. And the benefits of, I'm just going to put the box there, probably not accurate now, but The whole point of catching and isolating the higher time frames wick is that it's going to be more probable in giving you the safest possible stop loss that you could have. It's going to therefore increase your win rate, and also it's trying to give you the maximum potential risk reward return that you could get for whatever the size of that candle ends up being. You don't know how big that candle's going to be when it closes, but that's not the point. You know, if it's that small, that's fine. You're just trying to get your win rate, safe stop, and maximum risk reward return that you can by not entering in the body of the higher time frame candle, just focusing the wicks on the higher time frame candle. I hope this breakdown helps, guys. Let me know if you've got any questions in the comments section. Thanks so much.